Good afternoon, everyone, and welcome back. This is daily trading analysis with a quick market update for today, August 5th. Today, I would say it's a Black Monday. We've been in a pretty big sell-off since a couple of weeks ago, and Friday it accelerated with the back data on the employment rate, and now during the weekend, Asia, Japan, China, Europe, France, UK, and now US are feeling the pain in the worst day since the pandemic. VIX has reached 65 level. It's now pulling back, but let me tell you, I think this is a capitulation. I think this is a turnover because there are so much fear in these markets, and there are at the same time so good bargains in some of the stocks. Nvidia, starting with Nvidia at 90s. I mean, there are certainly some investors, some big funds accumulating and buying. But however, we day traders are looking for volatility, but today's volatility, it's crazy. Let's start with the economic data, and then we are going to move into the charts. But let me tell you that today it's super wild. This is the worst day since April 2020 in terms of negativity. S&P Global Composite and Services PMI final for July came in at least above 50. And above 50, it's expansion, and that is good for the economy. We are right now in a situation in which good data for the economy is good for the markets. We are no longer talking about inflation. We are not worried about that because we are pricing in heavy, aggressive cuts in September, November, and December. But we need to feel with the data, we need to feel that the economy is again strong. And this data contributes to that. ISM Services PMI 51, business activity 54, employment 51, new orders 52, prices 57. I mean, all this it's for July. All this is for July. This is a check in the right direction for what is right now our concern, the economic weakness. Let's see what August brings us in terms of economic data, but this is part of the reason why today we are seeing a little bit of a bounce. I told you about the interest rate cut. We are pricing in pretty heavy interest rate cuts. 83%, this is 50 basis points. This was 25 basis points, and we are moving from this to this. And then this morning, this 48 was no longer here. It was another 50 points with 65% of probability at 425 for November, and 25 basis points finally in December. So a lot of people it's really scared about what will happen here, but we are certainly pricing in big jumps in interest rates. Let's now move into the charts, because the first thing that I would like to talk about is the setup that we got. Look at this. This is today's range. This is Friday's close settlement at 18,556, and we went all the way down 1,200 points, 6.50%. 6.50%. Holds in the Nasdaq, limit down circuit breakers, are at 7% during the overnight. We were at 0.50% of that. That is insane. But let me explain you the setup and what is happening. We just basically sold off since the open. We had a huge gap. We crossed below the 12%. We crossed below the 50%, the 15% from all-time highs. And in terms of the daily, we are down here. It's pretty obvious, right? It's pretty obvious that we were going to find some buyers down here at 17,364. This daily candle, it's capitulation to the downside, and at the same time buying opportunity for a lot of people. I mean, this daily chart it's wild. Look at this. It's wild. It's extreme volatility. So I tried several times to buy some setups. I got stopped out twice. The first one, these candles, for example, this setup that I took for this sell side liquidity, bounce, fair value gap, entry, you know my setup. I was targeting these relative equal highs at 17,990, basically 18,000 psychological level, and it went up, and then dumped. This stop was 28 points. This was 600 bucks in just this candle. This candle. And look at where we are. This is just this small beep. Volatility today, it's extreme. My second setup was, okay, let's wait for another signal. Let's mark the low, the high, the golden pocket, and the fifth retracement. We were again trending down until this spot down here, in which we were at 50% retracements in this high up here. And I was waiting for the same setup. Inverse fair value gap, bullish fair value gap, candle that taps in, long stop at, in this case, it was 34 points. I took it because it was nice. At some point, we were going to take all this liquidity up here. And it worked. It tapped this level. The 15% was rejected, and I put my stop at break even. I was not willing to risk anymore a losing trade in this market, in which one candle can be, in this case, another 600, in this case 700. So stopped at break even. Another loser. Not loser, but another 2 out of 3. I usually trade 3 times, and if not, I'm down for the day. Losing, I mean, going down again. I was watching these for a retest and a fair value gap as the last resort, and an unbelievably good setup. And look at this chop. It was not my setup. It worked, but it was not within my parameters. There was a 15-minute order block here that was also rejected, and we broke down. That's why I was scared. So let me just remove that, the setup I talk about. Let me just clean this a little bit to see where we are right now when we are trying to bounce. Finally, into the open. We opened here and we went straight up to the liquidity. Do you know how frustrated I was? Because there was no setup for me. This is the type of days in which we tilt, we just revenge trade. I didn't do it, but I'm down 600 on the day. And I mean, volatility is opportunity, but this market is pretty wild. I have friends, I have colleagues, I have my prop firm that traders are being liquidated. Hundreds of thousands of traders are being liquidated in this volatility. So the bounce from here to here was done. Then golden pocket into another double bottom, and then we are pushing. This is a textbook setup, but the volatility is so big that we day traders cannot even trade this with micro. I was trading this with minis. I thought about taking maybe 2 or 3 micros to lower the risk, but I mean, at some point, it's just quality setups. I tried to take those, it didn't work. We are now, let's see the 15-minute. The 15-minute looks pretty good, double bottom, and now we are above the 45 EMA, but we have the gap still here to be cleared. The 30-minute chart, let's focus on the 1-hour chart because we have here the volume profile. Both point of controls are here, and I will just wait for this 1 hour to show me some kind of strength. Right now, we have a double bottom here. We have this sell side liquidity that was not taken, and we have a fair value gap open into the 1 hour. This is the only thing that I can see bullish on. So this is the only thing that I can see bullish, 1 hour, and I can see the gap, I can see the settlement, but there's 400 points until there. So unless the price action shows me something, there are so much levels, there are so many levels. The 12% here, that is basically is into that, okay, and then we have the 10% here. Let me just correct these lines. Let's do a 2. This case is 2 into this. So we have the 10%, the 12, and the 15, and we are still in the middle of weakness. The 45 EMA, this blue line in the 1 hour, is still pointing to the downside. And we have not reached any major level. We just double bottom here to avoid a circuit breaker on the equity index. And we are still deep in the red in all the Nasdaq, deep in the red in all banks, deep in the red in equal weighted ETF, deep in the red in semiconductors. By the way, Nvidia is down 6% on news that Nvidia and Taiwan Semiconductor Manufacturing TSM are facing production challenges with the next generation of its AI chips. So basically, we have AI lack of production. We have issues on the supply chain, and this is not good. But anyway, I think this candle speaks for itself. There are people buying Nvidia at 91 because this is a bargain. And this is the only thing that I can see is positive for the market. The bounce after a huge correction in 3 days. Look at small caps, man. Small caps were being beaten down in 3 days. In 3 days, they were down 12%. The equal weighted ETF, it's down pretty damn heavy. In 3 days also. It's basically 6% on the RSP. And as you can see, we have the 3 indicators, the 3 percentages of stocks, momentum to the downside. Look at this. We are in a pretty bad situation. So this is not going to bounce because of whatever reason. We need strong catalyst to go out of this hole. To go out of this hole, we really need something pretty big. And I think the biggest thing that might happen is just in September, when the Fed cuts interest rates and basically we can take a relief of all this pressure that has been building for weeks. So basically we need support. We basically, in the higher time frames, we've been double bottoming. We have an open 1 hour fair value gap, but I mean, this thing is not looking good. It's not looking super strong. Nothing has changed, and we have the elephant in the room. Look at this uninversion of yields. It went to positive here. Here, we uninverted and quickly reverted. That doesn't mean anything, but the fear is here. The fear is here to stay. Look at this candle on the VIX. That's 64% of increase to reach 65, which was not at this level since the pandemic in March 2020. So this volatility is here to stay, at least temporarily. At least temporarily. I'm a little bit bullish because we were so deep in the red that big smart investors are taking this opportunity to just add in dollar cost average and buy some bargains. I think this 1 hour is going to be pretty key for the Nasdaq for this week. There are some setups that I would like to see. I would like to hold this zone between the 15% pullback from all-time highs and this 50% retracement in the 1 hour fair value gap. I want this to hold. Let me just put it in blue. This is what I would be watching for the rest of the week, or at least until tomorrow. I need this to hold. And then perhaps the gap to be filled. Something like this might be good. And this is, I would say this will take a couple of days because there will be a lot of shorts taking positions against this. And something also important, we need to close above the 200 moving average, this white line that is actually put in this 1 minute time frame, not in this bold line, but in this one. This one is the 200, which we are right now below that. So this is the setup. I need this market to hold the 1 hour. Let me just go to the 15 minute to hold this zone and gap fill at some point this week. I will be watching. I will not be taking positions into the overnight. I will not trade with, I will not try to catch trend days like I used to do, because right now I'm just scalping. I just want a quick move because these moves are quick and are big. We can have 40 points like this. And we have to be really, really good at risk management right now, because if not, we are going to get destroyed. And that's all. We really need to be patient. There's a lot of digestion. There were pricing in a lot of interest rate cuts. Now we are adjusting. We need to wait for balance. And the balance after this huge move that happened in the last week, and now today, Black Monday, I think we can call it Black Monday already. I think we need to just wait and see how the market balances itself, the equilibrium, where we are, which are the key levels for long term, and try to find some risk versus reward spots to take positions to maybe take a little bit of that bounce, because this market is going to bounce, but maybe it's not ready. Maybe it's not ready. If we check the Nasdaq daily, I mean, we bounce from a pretty good level, but we can just continue lower and maybe reach 17,000. Anything can happen right now, anything. And we don't know what will happen. What is true is that I think I might put, instead of the 15, the 20. I don't think we are going to downside again. I would like just to wait and see the setup on the 1 hour fair value gap. I would like this market to hold this fair value gap, and let's see what happens. The open also was down here. Let me check the 1 minute. Where's the opening gap? The initial balance is up here, so we are below the initial balance, below point of control. Well, I don't know, guys. Today is super difficult. So if you are struggling, we are all struggling. Hedge funds are struggling, banks are struggling, everyone is struggling, because we are being corrected by the expectations. And when fear starts to cramp, to raise, I mean, everyone has fear. And at some point, we have to be objective, we have to be smart and wait for the equilibrium, for the balance, for those levels that scream, here we are, this is a good level that you can take to manage risk into a good trade for the short term. Let's try to find those. And that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, because I upload videos like this one every single day for market forecasts, market updates, and market recaps. I appreciate your time as always. Today's been wild, the worst day since 2 years ago, and volatility, fear, downside potential. I mean, there's a lot of opportunity, but you have to be really, really, really careful. I hope you are good in your account. I hope you are trading this, following your process, managing your risk, avoiding tilt, reverse trading, and live to trade another day. That's the mantra. Live to trade another day. Stay safe, everyone, and see you tomorrow.